Silicon Valley and Signature Bank were unable to meet withdrawals last week, causing the FDIC to shut them down. Typically, only deposits up to $250,000 would be insured, but on Sunday they announced that everyone would be repaid in full. This is the biggest bailout since the 2008 Great Recession. Stick around to find out how the bailout occurred and how this will affect you. So was this a bailout? The skeptics descend on Silicon Valley Bank response. So the government took drastic action to shore up the banking system and make depositors of two failed banks whole. It quickly drew blowback. So let's find out how this occurred and how this might affect you and why it drew so much controversy. So the reckoning came after the Federal Reserve, Treasury, and the FDIC announced Sunday that it would make sure that all the depositors in two large failed banks, SVB and Signature Bank, were repaid in full. The Fed also announced that it would offer bank loans against their treasuries and many other asset holdings, treating the securities as though they were worth their original value, even though higher interest rates have eroded the market prices of such bonds. So it was unclear on Monday whether the plan would succeed, which was yesterday. Regional bank stocks tumbled and nervous investors snapped up safe assets. We saw Bitcoin up a ton, so any safe haven assets were up a lot. I'll call it a bailout of the system, Mr. Kelly. It lowers the threshold for the expectation of where emergency steps kick in. I would definitely consider this a bailout as well. They're trying to not consider this a bailout, but in my opinion, this is definitely a bailout because the government is stepping in and making sure that depositors are completely covered over $250,000. So it makes you wonder, when would the government step in? When would they not? A lot of people are skeptic of this. So investors in the banks will not be protected, Biden said, and they knowingly took risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. I agree with Biden here, but he's completely going against himself when just a little bit later he adds, no losses will be borne by the taxpayers. Let me repeat that, no losses will be borne by the taxpayers. So if no losses are borne by the taxpayers, then who's going to be paying really for this over $250,000? Well, I know they do have some sort of special assessment fund. So what's basically happened with these special assessments to cover SVB is the Biden administration has found a way to make taxpayers pay for a bailout without taking a vote. So essentially we're paying for a bailout, but we're not really voting on it. So it's hard to say this isn't a bailout. Merely because taxpayers aren't on the hook so far doesn't mean that something is a bailout. Many academics agree that the plan prevented a more broad and destabilizing bank run rather than saving any one bank or business. So I agree with that in the bigger picture, this was the right thing to do. But like I said, it just draws concerns on who's going to be protected and who's not going to be protected moving forward. I think a lot of people are going to lose trust in the banking system as a whole. I think it was great that they did this because they didn't want a whole bank run in general throughout the whole country. But once again, there are questions about the moral hazard. One of the signals the rescue sent to depositors was if you hold in a large bank account, the move suggests that the government would step you in to protect crisis. So maybe they should actually raise the insurance to cover more than $250,000 if they're going to cover it anyways. So it could, another thing on the flip side though, this is the downside to it, is it could give big depositors less incentive to pull their money out if their banks take big risks because they think, oh, we're just going to get bailed out by the government and get our money back, which could in turn give the financial institutions a green light to be less careful. So I think the big picture here is that SVB and Signature Bank made fatal mistakes in managing other people's money, but nothing's really going to change if they just get bailed out because other financial institutions are going to assume that they're just going to do the same for them. So I think it's a really bad situation overall. And the Silicon Valley, yeah, it's a massive failure of regulation and supervision, clearly. And I think there's going to be a lot of concerns after the 2008 crisis. You know, the concerns about moral hazard, concerns about who the system is protecting. You know, these are all front and center again, which I 110% agree with. So let's just move on to see how this might actually affect you, because yesterday all these regional bank stocks plummeted. We saw crypto go to the moon kind of yesterday. We saw a lot of crazy moves in the market, and I think that's how the average retail investor is going to be affected because their portfolio is going to be affected significantly, and they're also going to have to make decisions on who to bank with. So if you guys didn't check out my video from 2 days ago, definitely check out that video because I tell you guys how to stay protected with your funds. But currently, I think another good thing that we can do is look at these big dips. For example, when asked which regional banks look most attractive, Maranek recommends the Fifth Third Bank. Stock is off more than 27% over the past week. So that's currently something I'm going to be looking at, is to shift my money into the finance sector, into banks that I think are going to come out on top and safe from this, because that's just a big short-term dip and could present a buying opportunity. So once again, Have your own strategy, have a plan, and make sure that you understand the situation so you don't get caught up in this in the future. Let me know in the comment section down below if you believe this was a bailout. Like and subscribe for more personal finance content. Thanks.